My name is Peter Krauth, and I'm going to talk about why I think your wealth is under attack and how I think silver can help you fight back and win. I'm going to cover 4 main points: why silver is a critical metal and an outstanding investment. I'll also cover silver's performance in previous bull markets. I'll talk to you about what I think is next for silver and how you can invest in silver for explosive gains. Whoops. So your wealth being under attack is not, I don't take that lightly, and I don't say it lightly. It's a condition that is technically called financial repression. Those are not my words, but if you look up under Investopedia, it's a combination of low interest rates and high inflation. And since 2008, at least, the US, Canada, and most of the developed world has been living with near zero interest rates, which, in fact, if you look over history, 5,000 years of history, these are the lowest rates over that period of time. So savers are being punished, investors are forced to look elsewhere for returns. And if you look at what stocks are doing, the broader stock markets, if you look at real estate, well, you can certainly see that these are markets that look very much overvalued. And that's a result of people looking for returns where they're not getting them from regular interest rates and savings in the bank. In fact, the chart here, all the way over on the right side, you have that red bar, and that's the gap between what you would earn today in a savings account versus what you need to earn just to keep up with inflation. So the gap is wide. The gap is the widest it's been in about 25 years, and investors are desperate to look for ways to make up for the loss of interest. As I say, we're dealing with big inflation. That's across all economic sectors. In Canada, the latest print for September or October was 4.4%. That's the last 12 months. It's the highest inflation rate in 18 years. It's all across the board: food at 4%, shelter at 5%, and gasoline at 33%. In the US, it's even worse, and these are just the official numbers. The latest print was 6.2% over the last 12 months. That's the worst rate in 31 years. And if you calculate even just at 5.4% inflation, over the next 10 years, $100 would only give you $60 of buying power. So that's the effect that just 5.4% inflation can have on your cash. And other groups, people like Shadow Stats, that are well recognized, that that calculate inflation and other metrics, economic metrics, they base their inflation calculations on the 1980 method, the way the US government used to calculate inflation. And on that basis, they estimate inflation is actually more at like 14%. If you look at the average over the last 20 years, inflation would have been 9% across that period of time. The effect of all of this is that commodities are breaking out because commodities track inflation and compensate for it, especially in highly inflationary periods. The chart on the left is a superimposed chart of inflation expectations going forward 5 years and commodities. And as you can clearly see, commodities very closely track inflation expectations. The chart on the right is the producer price index. And if you look way over on the right, you can see that we had a very big breakout. The producer price index is running about 8.8% or so right now. And that's all the raw materials, the inputs that go into everything that we buy as consumers. And so if you're wondering why things cost more, well, the producers are clearly passing on those costs. And as I mentioned earlier, commodities are affected by low interest rates and high inflation. And if you look at a broad measure of commodities, the CRB index, over the past 9 months or so, that's up 25%. And from the low in March of 2020, commodities are up 100%. All of this is being led, or I should say impacted and fed in part by the global green revolution. If you look back over the last 3 centuries, The first industrial revolution was all about the steam engine and mechanization. The second, in the 1800s, was all about mass production and assembly lines. Last century, it was about automation and computing. And this century, it's all about networks and interconnectivity. The difference is that we have this big push towards clean energy, but it's a globally coordinated effort. And as you'll see, certainly silver is a big part of that. So let's talk about silver's industrial applications. Solar panels alone account for 100 million ounces a year, or 10% of all silver demand. And as I mentioned, the green revolution is a big part of silver panels, and of course, silver being part of that trend. Automobiles account for 60 million ounces, or about 6% of the silver demand per year, the silver market. And interesting to note that electric vehicles use about twice as much silver as the traditional internal combustion engine vehicles. And silver demand from the automotive sector is expected to grow by about 50% in just the next 4 years. Electronics currently require about 48 million ounces. That's about 5% of the annual silver supply. That's expected to grow about 50% over the next 10 years. And medicine is a big consumer of silver as well. There are developments on nearly a daily basis in terms of applications for silver. It kills bacteria, it limits infections. It's embedded in medical equipment. You find silver nanoparticles in cornea replacements and in contact lenses. And so there's no end to the uses for silver. Now we can look a little bit at the supply side. Well, silver supply is seriously challenged. If you look at mine supply over the last 5 years, it's been declining very steadily. It certainly got worse last year with COVID shutdowns, but it's an industry-wide issue. It's been falling across the board. None of the world's top 10 largest silver-producing countries has escaped this trend. Mexico, Peru, China are the top 3 producers, and you can see a serious drop-off in their mine supply in this chart over on the right. Now, the silver supply, or the silver mining industry, is very particular. Less than 30% of silver mined actually comes from what we call primary silver mines. 73% of silver produced comes from mining other metals, things like gold, lead, zinc, and copper. So the implication is that if silver prices rise with these miners, so few of them producing silver as a primary product, and so many of them producing silver as a secondary byproduct, they have little motivation to try and produce more silver. It represents a small portion of their revenues. So you have a situation where silver supply is inelastic, and so a low supply combined with growing demand leads to even higher prices. Now we can look at the demand side of things. For 2020, and this is excluding silver ETFs because unfortunately some of the larger research groups choose to exclude silver ETFs in the demand. I don't know why, or maybe I do. In 2020, industrial demand represented 54% of silver requirements. Of course, the big ones being things like solar and electric vehicles and others. Investment represented 22% of physical demand. Then you have silverware at 4%, jewelry at 17%, and for photography rounding things out at 3%. And silver demand has been exploding, investment demand in particular. Last year, 2020, it was off the charts. Global silver ETFs with the demand from 2020 now exceed 1 billion ounces of silver. So that's an interesting note. Over 1 billion ounces of silver are held by ETFs. That's the equivalent of an entire year's supply of silver. And the ETF demand in 2020 was up 300% over the previous year. So in 2019, silver demand from ETFs was 83 million ounces. That's already more than 8% of the whole year's supply. And in 2020, it was 331 million ounces, representing 33% of the entire supply for last year. So this is why we say investment demand has been exploding. And if you look at buying physical silver, coins, and bars, you'll find out very quickly that you need to pay anywhere from 40 to 50% above the spot price to get an ounce of silver. The normal premiums are anywhere from about 12 to 15%. And ever since the pandemic hit, this hasn't let up. You're still looking at about 40 to 50% premiums on the spot price for coins and bars. Now, if I do my own math and ignore the big research groups, and I look at silver ETF demand, and I include that in demand for physical silver, then in 2020, you had a 25% deficit in supply in the silver market. And for me, that's just too much to ignore. So all of this tells me that silver is the cheapest asset, and I'm going to explain to you why I see that is the case. If you look at nominal prices, the price of silver right now is still 50% below its all-time high. If you use government statistics, if you like to believe those, and use their inflation rates, silver is currently 85% below its all-time inflation-adjusted high. A dollar invested in silver in 1970 was worth $16 last year. A dollar invested in gold in 1970 was worth $50 last year. So as you can see, silver has a lot of room to make up to its cousin gold. If you compare silver to a broader stock market measure, the S&P 500, in 1980, silver bought you 0.445 of the S&P. Currently, silver buys you 0.007 of the S&P. So if you do the math and you compare silver's peak in 1980 with today's price of silver versus the broader measure of the S&P, silver is currently 98% below its 1980 peak. And one last measure of silver and why I believe it's the cheapest asset. If you look at all the major metals, copper, lead, nickel, zinc, the platinum group metals, and gold, silver is the only metal that is still below its 1980 high. Every single other major metal and even many minor metals are much above their 1980 high. In fact, the lowest of this group is about 70% above its 1980 high. The highest, being rhodium, is 2,500% its 1980 high. And yet we still have silver about 50% below its 1980 high. As a result, I believe historic new highs are coming in silver. The 1970s silver bull market produced a 37 times return for the metal. The 2001 to 2011 bull market produced an 11 times return in silver. And silver stocks can offer sometimes extreme leverage to the silver price. In the early part of 2016, in the first 7 months, the price of silver was up 48%. And if you look at a broad basket of silver stocks using the SIL ETF to compare to silver, in those same 7 months, the SIL ETF, again, a broad basket of silver stocks, was up 240%. So during that 7-month period, larger silver stocks offered 5 times leverage over the gains in silver. If we look more recently, since March of 2020, silver stocks, and this actually needs to be pushed higher because of the last week or two, but silver stocks until recently were up 84% from their March 2020 lows. Gold stocks were up 56%. And if you look at the period in right around here, July, August of last year, you can see that silver stocks started to considerably outperform gold stocks. And this is the kind of behavior that you get in sort of the advanced stages of a precious metals bull market. And as you can see, from the time that outperformance started, the gap has maintained itself. So this is something that I expect to continue as the gold-silver ratio continues to fall and silver continues to catch up with gold. As I see it, silver is starting to enter the acceleration phase, which is the way it behaves in an advancing precious metals bull market. If you look all the way on the left, you can see that in the late stages of the 1970s silver bull market or precious metals bull market, silver took off in the last couple of years, dramatically outperformed gold. We had similar action in 2011 when silver hit a near all-time high again at $49, again dramatically outperforming gold, which I'll show you in the next chart. And I believe that the outperformance that we started to see last year around the July-August period is indicative of this same kind of acceleration in the current precious metals bull market. Here's a comparison chart that overlays silver and gold. In the 1980 peak, on a percentage basis, silver dramatically outperformed gold. Farther over on the right side, if you look over here, you see that to a lesser extent, but still nonetheless, on a percentage basis, silver still considerably outperformed gold. And where we are right now, there's a gap. And that's the opportunity that I see, where silver is still 50% below its all-time high. Gold is only about 10% below its all-time high. And I think silver is going to start doing a lot of catching up very soon. So I'd like to get a show of hands. Who thinks that silver is going to take out its $50 all-time high in this bull market? All right. Who thinks silver is going to double that and take out $100 in this bull market? All right, well, now I'm going to tell you what my target is, and then I'll justify that target. So I think silver is going to reach $300 in this precious metals bull market, and I'm going to show you two ways I get there. I have several more, but I'll keep that for another conference. The first one is, if you look at what happened with the gold to silver ratio in 1980, it bottomed at 15, meaning it took 15 ounces of silver to buy you 1 ounce of gold. My estimate for the peak price, at least for gold in this silver bull market, silver gold bull market, is for gold to reach about $5,000. If you use that same ratio when silver peaked in 1980, 15 to 1, that gives you a $333 silver price. Now, if you use the $50 peak in silver in 1980, and you compound $50 at a very conservative 5% since 1980, you actually get a $352 silver price. So these are just two ways you get even well above $300 for silver. So what do you do with all of this information? How do you use it to invest and profit from silver and silver stocks? There are lots of options, the first being the most conservative and the safest, being, of course, physical silver, coins and bars. Unfortunately, right now, as I mentioned earlier, premiums are very high. Your next best option, and I don't consider it to be an equivalent, but silver-backed, physically backed silver ETFs could be a way to substitute that, at least over a certain period of time. These are not all created equal. I suggest you do your homework. My standout favorite in this sector is the Sprott PSLV silver ETF. It has very low premiums above the silver price. Sometimes, if you're lucky or patient, I wouldn't bet on it right now, but you could actually buy that below the spot silver price, so a discount to silver. That's an indication that silver is undervalued. You have silver miner ETFs. You have royalty and streaming companies, large producers, growing producers, developers, and junior explorers. And you're going to hear from a really good group up here right after this. So how do I vet silver investments? Well, my first sort of higher level 3 filters are management. I like to see a depth of experience and lots of prior successes. If we're talking about explorers, I need to see that they have access to great knowledge resources. When I look at grade, on the explorer side, I expect or I aim for companies whose at least their flagship product is close to or above 50% silver content. If it's a producing company, I look for, again, close to or above 50% revenues from silver. And then the third filter is location. And for me, location is important. Safer is better. I favor North America, Canada, the US, and Mexico. I like Australia, some parts of Europe. South America, I'm very selective. I'm open to a few places. I would pass on others, but that's on a case-by-case basis. Again, how do you use this? Well, I think that we have a major opportunity ahead of us. In a bull market, a crucial factor is to identify the market early, the bull early as possible. In this case, silver is still 50% below its all-time high. There aren't too many assets you can say that about today. If you can hold on through corrections, you'll maximize your profits. Silver is especially volatile. If you expect it, you'll have the patience and the wherewithal to hold through those corrections. And if we're all right about silver being in a major bull market, the rising tide lifts all boats. You don't have to pick all the best companies. Your silver stocks are likely to do very well just by virtue of being in the right sector. So all of this boils down to the research that I do. It's a silver-focused newsletter. It's all about what I buy and sell with my money. It's unbiased research. I don't take any compensation for the companies that I write about. I cover the full risk spectrum, everything from silver ETFs and large producers all the way down to silver explorers. It's aimed at new and experienced investors, so I have everything from low to higher risk stocks in the portfolio. It's published by a resource maven. I joined Gwen Preston, who's here in this room, about a year ago. We had the same vision for this product, decided to quickly get it out to market. It's done very well. We're independent and we're supported exclusively by subscribers, so we have no compromise, no conflicts of interest, and we never take money from companies for coverage. As a precious metals expert, I contribute to all of these media outlets. And so for a final thought, silver's in a major bull market. It's still very cheap. The opportunity is in front of you. Will you act, or will you miss the silver opportunity? So if you want to know more about the newsletter, please go to silverstockinvestor.com. I did want to mention that I'm working on a book on how to invest in silver and the opportunity that's ahead of us. Expect to have that out early next year, in the very early part of next year. It's going to be most likely called the Great Silver Bull.